I would think inflation and the momentum there is very high, and we had certainly expected that they would have probably already moved in the YCC. But I think with their last meeting, and as you said, with subsequent comments, they seem to have indicated that now they want to be examining the situation in a little bit more detail, and probably more importantly, at least our view now is that they probably need to wait till they get confirmation from next year's wage negotiations to be able to see whether this inflation momentum is actually sustainable or just temporary.
Isn't that tricky? Because, you know, they're in a situation where they're basically suggesting it's transitory. You've had that big increase in Shunto, but a lot of the inflation that's happening now is services side. It's not from, import side inflation. So
look, I think there's a cost benefit to all policy decisions, and I completely agree with you. I mean, like I said, we had expected that they would have already seen enough risk from what we are already seeing in inflation momentum, especially in the underlying core measure, the core and core measures, are clearly seeing that momentum, which we would have thought would tip them over to wanting to get off the YCC, which ultimately is not even about necessarily raising rates, but getting off this anchor which they have given to the curve. But clearly, BOJ at the moment thinks otherwise.
Exactly. Just sometimes it blows the mind, because you're exactly right when it comes to that core print and with all the subsidies they're providing when it comes to food and with electricity. But I'll leave Japan where it is for now. I'll talk about it the next time you're on. I wanted to ask you about the US dollar, because there's this growing, ever so slightly in some respects, but there's this growing belief that the US dollar perhaps isn't going to weaken, but if anything, it's going to strengthen, considering what's been happening in terms of this fear that the worst could result, and then you're going to have a flight to the US dollar. Is that something that you think is possible, considering the prevailing economic conditions, or?
So I think there is a little bit of a risk. Let me step back a little bit. I think the broader dollar cycle, I would argue, peaked out last year. So I don't think we are necessarily returning back to the period we had from before last year. But at the same time, it's also true that the excessive dollar risk premium, which we had seen at that point in time, has corrected since that point in time. DXY has come off a fair bit of time. I think the relative policy cycles have shifted as well. So we still think Europe, for example, ECB has got more tightening to go. We think the Fed's peaked out, but it's also true that the Fed's already priced in for a fair bit of rate cuts this year. So which we think is at risk of not being realized, and probably the easing cycle might only begin next year. So I think the dynamics have become more multidimensional, more complicated right now, which therefore doesn't make it obvious that there is going to be a big dollar move immediately here. We are still biased to the fact that the dollar will be softer, but I think it will take the summer months to get a little bit more clarity on these relative policy cycles between US, Europe, and for that matter, even the other G7, like BOE and, as you said, Japan, before I think we find out whether you can have the next bid. I am not so convinced that the dollar will necessarily benefit from the safe haven kind of a bid, unless things, of course, were to go significantly sort of worse from here and you get the really safe haven bid from a bad case scenario.